What if I told you the biggest risk right now isn't the market crashing? It's thinking the risk is already gone? Let's talk about what's really happening beneath the surface, because today's news sounds strategic, but it's quietly increasing political risk. According to reports, the US and NATO are believed to have reached a strategic framework regarding Greenland. Under this framework, Washington would gain indefinite access to Greenland to build military bases, extract strategic minerals, and deploy the Golden Dome missile defense system. In exchange, the US would withdraw plans to impose tariffs on 8 European countries. On paper, it looks like cooperation. But here's the problem. Greenland's prime minister has denied any knowledge of this agreement, clearly stating that no deal involving Greenland can exist without Greenland and Denmark at the table. That single statement reintroduces political uncertainty into US-EU Nordic relations, and markets hate uncertainty. At the same time, pressure on Iran is escalating fast. President Trump has reaffirmed plans to impose a 25% tariff on any country trading with Iran, describing the measure as about to take effect, despite already claiming it was effective earlier this month. Even more concerning, the US has warned that a large naval fleet is being deployed toward Iran. So we're seeing economic pressure and military signaling at the same time. Now let's look at how the market is reacting. US equities are continuing their recovery. Bitcoin is consolidating below $90,000, but gold is telling a very different story. Gold has printed new all-time highs, moving rapidly toward the $5,000 level. From a technical perspective, the trend is still very strong. Price surged aggressively from the 480x area to nearly 496x in a steep, impulsive wave. However, price has now reached a week high, and we're starting to see early corrective candles. This is important because this is short-term profit-taking, not a trend reversal. Medium-term bias remains bullish. Short-term, expect volatility and technical pullbacks. The strongest resistance zone sits between 4,960 and 4,980. This is a weak high created after an overheated move, and it's a classic area for bull traps and stop-loss sweeps. Chasing buys here is risky. Short-term sell setups are only valid if we see confirmation on M15 to H1. On the downside, the first key support is 4,900 to 4,915, the previous high that was just broken. If price holds above this zone, the uptrend stays intact. But the healthiest and safest support zone is 4,850 to 4,870. This was the accumulation base before the strong breakout. If price returns here without breaking structure, this is the highest quality buy zone, with clean risk to reward and tight invalidation. So let's talk scenarios. Scenario 1, healthy short-term correction. If price fails to break above 4,960, shows rejection, and confirms a bearish change of character on M.15, a pullback sell becomes valid. This would simply reset momentum after an overheated move. Scenario 2, continuation higher. If we see a strong H1 close above 4,980, with real volume and conviction, then buying the pullback becomes the safer strategy, targeting new psychological highs above 5,000. The key message here is simple. This is not a market to chase emotionally. This is a market that rewards patience, structure, and discipline. And right now, gold isn't just reacting to price. It's responding to political ambiguity, geopolitical tension, and macro uncertainty. That's why the trend is strong. And that's why timing matters more than ever.